This is Bloomberg Businessweek Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Businessweek Daily with Carol Massar and Tim Stenivek, live on Bloomberg Radio, television, and Bloomberg Originals.
And a very good afternoon, everybody, live from the Bloomberg Businessweek studio in New York. It is Bloomberg Businessweek Daily on this Thursday, July 2nd, 2026. I'm Tim Stenivek, along with Nora Melinda. She's from Bloomberg TV. She's the markets correspondent over there. She's in for Carol Massar this afternoon. Nora, I don't know about you, but it feels like Friday.
It feels like Friday. I know we usually call it Thursday, Friday, Junior. I don't know what we call it today. Is it still Friday, Junior, or just an early Friday?
Today's like everybody on Wall Street, as a longtime colleague here told me, is already on their way to Long Island this weekend.
No one's green dotted. No one's online on the Bloomberg terminal.
Hey, we are here.
But we're here.
Grateful for all of you joining us for the next 3 hours and the next hour right here on Bloomberg TV. We are, of course, talking Jobs Thursday, because even though it's not a Friday, we did get a jobs report today. Slower than anticipated increase in U.S. jobs. Most stocks are actually higher in the S&P, but the S&P down 0.7%. We're going to have much more from Charlie Pellet in just a minute. Also, on this jobs report, Marta Norton from Empower is stopping by. We're going to talk to her about the economy, the path for rates, the consumer asset allocation, and more. Nora, speaking of the consumer, you have any backyard barbecue plans for this weekend?
See, I don't really have a backyard. It is New York City,
it is New York
after
City.
all.
Yeah.
But maybe I could find somebody's backyard and enjoy their barbecue.
Maybe you can not barbecue, but have people over. It's going to cost more this year. Wells Fargo actually crunched the numbers, and it turns out that burgers may not actually be the star of the show.
I know. So I'm hearing.
All right,
we'll
we're going
see what they say.
Talk about that a little later. Also, Bloomberg News, the first to report that some key European powers and officials from Gulf Arab countries now believe that ships transiting the Strait of Hormuz will have to pay fees to Iran and Oman. Stuart Paul from our Bloomberg economics team is going to be joining us in just a few minutes to talk about the implications and the economic effect of a potential toll. All that and more coming up over the next hour right here on Bloomberg Businessweek Daily. First up, though, a check of the day's trade and top business stories. Here he is, Charlie Pellet.
All right, I thank you very much, Tim and Nora. Right now, we are looking at a record on the Dow Jones Industrial Average. Perhaps the key takeaway at this hour, well off session highs. Not just that, but lows of the session right now on the S&P. The index stands at 74.33. Yes, light volume, down 50 points, a drop there of 0.7%. The Dow up 178, up 0.3%. But as we heard from our Eric Weiner minutes ago, the real problem today, sell-off in chip stocks. They are under pressure big time. The SOX, the Philadelphia Stock Exchange Semiconductor Index, now down by almost 7%. NASDAQ is down 1.5%. The NASDAQ 100 Index down 2.3%. And the VIX now above 17. 10-year on this jobs Thursday, 4.48%. The 2-year, 4.13%. The 30-year, 4.98%. We've got gold up $78 the ounce, up 2% now, $41.09, while West Texas Intermediate crude down 0.2%, $68.41 for a barrel of WTI. U.S. hiring did slow in June, even as the unemployment rate fell, curbing some of the budding momentum in job growth this year. Again, the Dow higher at a record, S&P right now down 0.7, the NASDAQ 100 Index down 2.3%. Chip names under pressure. Case in point, right now we are looking at shares of Qualcomm. They're down by 4.9%. NVIDIA is down 2.5%. Micron down 7%. Intel down by 5.8%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. And Tim and Nora, that is a Bloomberg Business Flash.
Hey, thank you, sir. Charlie Pellet. Just to build on what Charlie was saying about the stocks, down by close to 7% right now. Chip stocks under pressure. Every member of the Philadelphia Semiconductor Exchange is lower right now, all 30 of them. Though, zoom out, year to date, stocks still up 76%.
Right, and it's really interesting when we look at the under the hood of the S&P 500, because we do see healthcare and consumer staples. They actually are holding up in this market. I was speaking to some sources earlier that were just saying, yes, we are seeing this sell-off. Yes, we're seeing a rotation out of tech. But we do still see some segments, some sectors in the market that are holding up, and it seems to be some defensive ones here.
Well, let's see if the jobs report shed any light on where we are in this economy. I want to bring in Marta Norton, Chief Investment Strategist at Empower. She joins us from our Chicago bureau. Marta, always good to check in with you. Just to bring everybody up to speed, U.S. hiring slowed sharply in June, even as the unemployment rate fell. Non-farm payrolls increased just 57,000 last month. We also saw downward revisions to the prior 2 months. Is this the start? Can we take this report to show that the economy, or at least the jobs market, is losing momentum, or is that reading into it too much?
Yeah, I think it's hard to say it's losing momentum. I'd rather characterize it as kind of greater clarity, kind of replacing what we had thought was occurring, which was this surge in payrolls. And I think this idea that we're actually seeing a quieter, stabilizing job market rather than an accelerating one is something that fits with the longer term trends. I think something that I point to pretty regularly is just where we're seeing wage growth. And it really has come down on a real basis. We're a bit behind the 8 ball there. And I think that's in step with a normalizing, stable, quiet job market.
And so what exactly is standing out to you in this report? It was a bit of a mixed report. What's holding up for you, and what are you seeing is not necessarily holding up in the way that it should in the job market?
Well, I think, it's a tale of two numbers, right? People can focus on payrolls or they can focus on the unemployment rate, which ticked down. But I think the real story is what we saw to revisions, because there was so much enthusiasm around the payrolls that we saw in prior months, and this expectation that maybe not only was the job market stable, but it was accelerating. And I think we can look at the results today and take that to mean that actually I think what we're looking at is this smoother trend rather than something that gives the Fed free rein to raise rates.
Well, we'll talk more about the Fed in just a second. But before we do that, I want to talk a little bit about what we learned if we peel back the layers of this report a little bit. Biggest decline in leisure and hospitality payrolls going back to 2020. The BLS says it reflects weaker than usual seasonal hiring. I thought the World Cup was going to bring so many people to the U.S. They were going to be traveling. They were going to be spending money. Apparently, they're buying ranch dressing and taking it home to wherever they're from, because that's happening.
I can't blame them.
Right now, I can't blame them either. But that's not actually leading to hiring.
Yeah, it's kind of interesting because we did see strength in that area in prior months. I think that was one of the areas that did catch people off guard. Now, I would, caution people to take too much from any one data point. So I think if we look at the broader trend, there have been these areas of strength, that being one, healthcare being another. I don't think that's necessarily changing. But to your point, this was kind of a surprising statistical blip when we look at today's numbers.
How are you thinking about inflation right now, and also the dual mandate for the Fed? What are you focusing on?
Yeah. So inflation, of course, is just the story that won't die, right? Beginning of the year, there was, and even, towards the end of last year, there was a celebration that really we could move on past inflation. And 2026 has made it clear that we really can't. But I think a lot of it is on this supply side of things. So, of course, the energy shock, and then we have tariffs that occurred earlier. We also have this AI effect that is also very much driven by the capital spending cycle and not necessarily by consumer demand. So I think inflation is very much a frustration, but I don't think, and I think we can look at the labor report to confirm this, I don't think we're necessarily looking at demand-led inflation, or inflation that really is the type of inflation that the Fed has a lot of control over.
So what are we looking at then?
Well, I think we're looking at supply shock upon supply shock, and something that at least stays the Fed's hand, but doesn't necessarily allow the Fed to hike. Because
okay,
go ahead.
Well, I was just going to say, so if we think about supply of certain things, we're going to be speaking to Robin Wenzel over at Wells Fargo Agri-Food Institute in just a minute about the beef price increases that we've seen. I mean, CME's launching like a tool to trade this stuff because the prices have gone up so much. There's also the oil shock, but what else are you thinking about supply shock? Certainly semiconductors too. What are we missing?
Well, so yes, the AI supply shock is one thing. The food is another. We're talking a lot about the El Nino effect and what that does to food around the globe. When we're looking at energy prices, we're of course caring about what we see at the pump and then energy prices throughout the economy. The tariff effect seems to have started to quiet, but that was certainly one of the supply shocks that we had to deal with as well. So it's kind of these different pockets of areas in inflation that are just kind of troubling consumers every which way.
What is one data point that you're really watching between right now and the next Fed meeting? Of course, we just had one pass.
Yeah, so jobs market, of course, is something that we're going to have to watch. I think one of the big considerations is whether we looked and saw peak inflation with what we've seen happening in the Middle East, or whether this inflation is more persistent. And so, of course, that's at the headline level. And there's also those secondary effects in core inflation that we'll want to keep an eye on. But if we are indeed at a point of peak inflation, then I think we can start to see some of those numbers decline, at least on the margin.
Marta Norton, Chief Investment Strategist at Empower, joining us from the Bloomberg News Chicago Bureau. Happy holiday weekend. Happy 4th of July, Marta. Well, Marta mentioned the supply shock. Well, oil, part of that supply shock. On that, let's talk a little bit about what we could see when it comes to potential tolling in the Strait of Hormuz. Our Bloomberg News team reporting that some leading European powers now accept that ships transiting the Strait of Hormuz will have to pay fees to Iran and Oman. This according to people familiar with the matter. Transit fees on vessels is something that we discussed earlier this week with Sam Dart, the co-head of global commodities research at Goldman Sachs.
The main thing they say is, I don't mind paying a toll as long as there's clarity on the rules, because what I don't want to do is to go against U.S. sanctions. My impression is that a lot of market participants, they are more in search of clarity than specific rules here or there, because even the toll that was discussed when it was being charged informally, my understanding is that it was to the tune of about $1, an extra $1 a barrel.
That's significant.
But it's not that different from normal volatility in the market.
Sam Dart, co-head of global commodities research at Goldman Sachs, joining us a little earlier this week. For more on what tolling would do in the Strait of Hormuz, we're joined by Stuart Paul, Bloomberg Economics U.S. and Canada economist. He joins us from New York. Stuart, do you agree with the view of Sam Dart at Goldman Sachs that, and this is based on who she's spoken to and then relaying this to us, it would amount to about a dollar per barrel of oil, which in the context of volatility in the oil market is not that big of a deal?
I think that's about right. $1 a barrel passes the smell test to me. But one thing that I'd like to add beyond what we heard in the previous clip is that beyond clarity around the rules and beyond clarity around sanctions, I think that what matters a lot, especially for exporters in the region, is going to be clarity around security, having some sort of expectation for the direction of the path of the war. As we saw when there were attacks on commercial vessels around the 25th, exports from Saudi pretty quickly slowed. We went from seeing average daily volume passing through the Strait of about 16 million barrels a day to about half the pace right now. I think that what matters more than tolling probably is going to be the direction of conflict, the direction of escalation versus de-escalation, and having additional clarity around security.
Well, on that point, Stuart, one thing that strikes me with this conversation is the president has been adamant about there not being any tolling. And if there is then tolling, then does that mean that there's still much daylight between what the U.S. demands and what Iran and perhaps, in this case, even neighboring countries end up doing?
Frankly, it just leaves us with a status quo where the president is making demands that are building on the memorandum of understanding that was set forth a few weeks ago. And Iran is continuing to sort of test the boundaries of that memorandum of understanding with particular attention and particular efforts being built up on the Iranian side to push the envelope when it comes to who controls the strait. It wasn't especially clear, for example, whether once the memorandum of understanding was no longer in effect, what the status quo would revert to, for example. So if you read it with a sort of legal eye, it's not entirely clear what would happen on the other side of conflict. It's not entirely clear whether Iran would be allowed to potentially insist on some sort of toll in the future. And when that's the case, you expect there to be this dynamic right now where there's kinetic conflict. There's Iran testing the limits of the tolls that it can charge in the current moment, re-escalation, de-escalation, just a sense of kinetic conflict taking place in the background, even as volumes remain in the range of 5 to even 15 million barrels a day. You can still see volume moving through the Strait, albeit at a lower volume than we saw previously before the war, around 20 million barrels a day. You can still see some oil flowing through the Strait, even with kinetic conflict and a testing of boundaries in the background.
Well, Stuart, we know that oil markets have really been watching every single development as it relates to the Strait of Hormuz. How are you thinking about any sort of particular inflationary risk? I know we've been talking about what this means for consumers in terms of gas at the pump, but as we're starting to see what some people call things stabilizing to an extent, how are you thinking about inflation risk as it relates to what you guys are thinking in Bloomberg Economics?
I think at this point, risk for inflation is skewed to the downside. Already the move in oil prices that we've seen would imply a lower global inflation, about 30 to 40 basis points lower than we saw in May. In the United States, if we're thinking specifically about gasoline prices have not moved in line with global oil prices.
The president has noticed.
The president, that's right. So the gasoline prices have come down about 15 to 20%, whereas global energy prices are down closer to 30 to 35%. Basically, what that ends up meaning is that the gasoline savings so far is about $4 to $5 billion a month. That's equal to about 60 basis points of nominal spending every month, if we consider it in the context of retail sales. That can be directed towards additional real goods and services that folks had been pulling back on. Consumers had become a bit more discerning in their spending habits amid higher gasoline prices. Now, with an additional $4 to $5 billion in their pocket that they're not spending at the pump, they can direct that towards the things they want to spend on rather than the needs that they must satisfy.
One challenge, and again, we're going to be speaking to Robin Wenzel over at the Wells Fargo Agri-Food Institute in just a minute about the rising costs, specifically of beef and what the 4th of July barbecue looks like. Is it enough to offset the growth in some prices at the supermarket?
It'll definitely help. Heading into the 4th of July, of course, everybody's preparing for the barbecue. Everybody's queuing up their TiVo to record the 4th of July hot dog eating contest on Coney Island, which will cost about 7.7% more this year than last year. Hot dog prices are up, beef prices are up. So the $4 to $5 billion in additional spending power will certainly help and to offset some of the increase in food prices that we've seen for sure.
Well, how long do we think this will actually take? It's funny. I know earlier in Bloomberg, they were talking about buy now, pay later and how people are actually using buy now, pay later for groceries. How long do you think it'll take to stabilize when we think about gas at the pump and what that means for consumer wallets?
Well, so it affects different portions of the income distribution differently. For example, those at the lowest end of the income distribution who are using buy now, pay later to afford some necessities like groceries, they actually don't have the same gasoline or even transportation spend as those closer to the middle of the income distribution. When I do a quick breakdown of cumulative inflation over the past, let's say 18 months, well, really since President Trump took office, those in the lowest income decile have inflation of 4.8%. Those at the upper end of the distribution have inflation of 3.8%, but gasoline hits hardest in the middle. So it's really going to be those in the middle who benefit most from declining gasoline prices.
Well, I'm going to Stuart Paul's house for my 4th of July barbecue.
I think we all are.
We should. Stuart Paul, Bloomberg Economics U.S. and Canada economist. Happy 4th of July, Stuart. Coming up next, we talk about that increase in prices next.
It's 2:21 on Wall Street. We do check markets all day long here at Bloomberg. We begin with a developing story headline right off the Bloomberg Professional Service. Blackstone's QTS is abandoning a massive data center in Virginia. Blackstone shares, they are advancing on that headline, up 1.9%. Again, bears repeating. Blackstone's QTS abandoning a massive data center in Virginia. That headline breaking right now on the Bloomberg. U.S. stocks, we are looking at an up day for the Dow Industrials. is in fact a record there. The S&P 500 index is moving lower. Chip makers are sinking. NASDAQ is down. The NASDAQ 100 index down 2%. And the SOX, the Philadelphia Stock Exchange's semiconductor index, down now by 6.4%. But again, the S&P down 34, trading lower by 0.5%. The Dow up 281, up 0.5. NASDAQ down 1.2%. The NASDAQ 100 index down 2%. And again, bears repeating on the SOX, down by 6.3%. We've got the VIX just below 16, a 10-year at 4.48%, with a 2-year 4.13%. And spot gold is surging 2.1%, $41.17 the ounce. West Texas Intermediate crude 68.62 a barrel now, a little changed, up under 0.1%. Barrel of Brent 71.69, up by about 0.2%. Keeping an eye on what's happening with the oil majors, they are higher. ExxonMobil up 0.7%. Chevron up by 1.7%. ConocoPhillips up now by 0.6%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. Nora and Tim, that is a Bloomberg Business Flash.
Hey, thanks for that update, Charlie. Just to build on what you were talking about with that redhead that crossed the Bloomberg terminal a few minutes ago, Blackstone's QTS walking away from plans to build its portion of a 2,100-acre data center campus in Virginia. It hands a win to residents who fought for years to topple the project. Shares of Blackstone still higher by about 2% right now. They did dip ever so slightly lower on that headline when it crossed a couple minutes ago. But this is not the only news with Blackstone data centers this week.
This is not the only news. We were just talking earlier this week. I was reporting on the fact that Blackstone was offloading 3 data centers in the Northern Virginia area. Now, we know that in Northern Virginia, also known as Nova for those Virginia residents like myself, it's where we really see a hotspot for data centers. And so there was some concern on the street as to whether or not this would be a negative thing for Blackstone. Are they really pulling back from their investment in data centers? But as I was speaking to people on Wall Street, they're saying that they think that Blackstone is essentially taking its money, recycling it, and putting it toward other projects. So it's not them taking a step back from the space, but actually doubling down into things that they think would have greater returns.
Or does it, and at the same time, does it offer some sort of playbook for communities that are pushing back against these projects, which increasingly is happening around the country? Well, also happening around the country, the 4th of July. And with the 4th of July comes the barbecue. U.S. ground beef prices have surged to all-time highs as the domestic cattle herd shrinks to a 75-year low. The cost of meat has been a point of concern for the Trump administration ahead of the midterm elections. The president has encouraged more imports from countries like Argentina to cool prices. Foreign shipments are projected to reach a record this year. The big question for a lot of consumers going into holiday weekend is, how much is that 4th of July barbecue going to cost? Robin Wenzel thinks about food prices nonstop. It's her job. She's head of the Wells Fargo Agri-Food Institute. She joins us from Minneapolis. So you and the team out with some research. Robin, it says the summer barbecue for 10 people will cost about $161. That's for a pretty big menu. It's for food. It's for beverages. Yet that's still up 2.4% from last year. What are the other distinctions that you notice with this year versus last year?
Yeah, well, I think you called it right out of the gate. You know, we are seeing meat and proteins really rise year over year, specifically when we talk about ground beef, which is up about 14%. As you noted, we are at record low supplies dating back almost 75 years. So that's really causing some stress with the budget. We do see a little bit of relief and better news with chicken breasts. It's a good lean protein that's up about 3%. Pork ribs are another option, again, up about 3%, but really good and convenient when feeding a crowd.
Well, is there any area where we've seen the shoppers are getting some relief? We've been seeing prices going up nonstop, as we clearly are seeing through some of your reports.
You know, it's a little bit of a mixed bag. 2 areas that I can highlight would be desserts. Sugar prices have stabilized. So we're seeing cookies, ice cream, both up just only 1% year over year. I'd almost call it flat. Pies, especially, you know, in the bakery area, again, up just about 4%. But I think that lowering of the sugar cost is helping out in the bakery aisles. Another area I'd point out would be fruit. And, you know, the best way that you can find value in fruits is to really purchase whatever is seasonal. So there are some good options there. Watermelon being one, it's down about 3%. And then berries are a mixed bag, but you can probably find some value in savings there as well.
Well, your report is called Stay Close, Grill Big. Are families choosing backyard gatherings as opposed to travel at all because of affordability?
We are seeing more people opting to stay closer to home, and with that comes the bigger crowds. You have hopefully some more family around and friends to join you. And that's really kind of what we took into account with our menu and our planning, really thinking about feeding that crowd.
We spoke to Marta Norton over at Empower earlier. I mentioned that the CME Group is launching trading contracts for the beef products that are used in hamburgers and meatballs as prices surge amid a shrinking U.S. cattle herd. As we mentioned, too, at the top of this, there are political implications of that, kind of both ways for the president. One is you want to satisfy the farmers without alienating them by allowing for cheaper imports, but you also want to make sure that the folks who aren't the farmers and are paying for this stuff at the grocery store aren't seeing prices rise too dramatically. Is there relief on the horizon specifically when it comes to beef prices?
In truth, it is going to take some time. Rebuilding the herds is not an overnight process, as you can imagine. It can take 2 to 3 years to get the calves up and ready. So we do expect to see some relief, but not until 2027, perhaps, as the herds start to come back up.
What about the screwworm part of the equation here?
Yeah, so the screwworm is back in the United States. It's really in the southern states. We're keeping an eye on that. At this point, we do not see that is really disrupting beef supply or having any issue on pricing.
Why do you argue in your report that ribs are taking center stage?
Pork prices have been relatively stable, especially relative to, red meat and chicken. And again, it's an option where it can be easy to feed a crowd with some of the different cuts of pork where you can really find some good value.
Well, also, how are you thinking about just not this holiday season, but what this means for grocery prices down the road as we're looking into the second half of the year?
The grocery prices have really followed the food at home information that we're seeing coming out of the BLS. And we see that it's moderating compared to some of the increases that we saw in the past, certainly tracking back to COVID. So there's good news that the increases are not as big as they had been, but still it is costing more. I will say, that when we talk about produce, fruits, vegetables, any commodities like that, it's really a function of supply and demand. The pricing is a function of supply and demand. And so with beef, we see the prices high because the supply is low. I think as we get into the growing seasons and more options are available and hopefully increasing some of the supplies, maybe those prices could moderate a bit.
We're speaking with Robin Wenzel, head of the Wells Fargo Agri-Food Institute. She joins us from Minneapolis this afternoon. One of the conversations that we had over the last couple of months has been the cost of transporting the products that we buy at the grocery store, and specifically when it comes to produce and getting, let's say, some produce from California to the East Coast, maybe not as important this time of the year, but the increase in diesel prices that we saw in the earlier part of this year really affecting those prices. Given that we haven't seen gas prices come down the way we have seen oil prices come down, is that still a big share of increase in cost when you're at the grocery store?
For the produce and for those transportation, those costs are built in. It can take some time to see that come down in the pricing. We, throughout history, we see diesel prices go up and go down. And so it does moderate within the fresh produce. It doesn't always tend to be to as great a degree as we would think. Although of recent, we are seeing some impact, but we do hope that will, again, start to moderate and trend down at some point.
When should that trend back to pre-war levels?
I don't have the answer to that. I would like to have that answer, but I think it is going to take a bit of time, as we can imagine, to kind of work through inventories and have it right size a little bit.
Well, Robin, outside of beef, where else are you really seeing consumers being crunched in this moment? Earlier, we were just talking about buy now, pay later on one of our earlier shows on Bloomberg TV, and how so many consumers are trying to find ways just to finance the essentials. Don't know if we consider 4th of July backyard grilling an essential, if you will, but curious, where else are you really seeing consumers essentially trading down?
With beverages, that's one of the areas. Certainly, we've seen kind of, alcohol beverages flat. They're up about 1% in price, but we are seeing consumers trying to find other options out there. Part of it is consumer taste and preference, people looking for low sugar, low alcohol, no alcohol options, and, switching to the sparkling waters and some of the other beverages. I would also say that, dried goods, those pantry items tend to be effective with cost savings for consumers versus a lot of the fresh produce and proteins.
Are we at this point, Robin, seeing any macroeconomic effects as a result of GLP-1s? There was so much talk a couple of years ago. There were folks out there saying this is going to be a boon for airlines because if everybody weighs less, they're not going to have to spend as much on fuel. Certainly, we've seen some CPG companies change up their formulations and add protein, and we've seen portion size commentary from companies. What are you seeing in your world?
We are seeing a shift in consumers' habits and their purchases at the grocery store. So we do see people trying to lean in on the outer aisle. Again, the fresh produce and protein when they're on GLP-1s, avoiding a lot of the processed foods, the sugary foods. So we see some changes there. Protein and fiber are the two winners from the GLP conversation. That's really where a lot of the consumers and people taking GLP-1s are focused with their nutrition, with their diet, and finding ways to supplement and add that to their menu.
But what types of proteins and what types
lean
of fiber?
Proteins.
Everything?
Yeah, lean
proteins. Okay.
Yeah, lean proteins. So your fish, your chicken, all of those. I'm really trying to pack it in. Also looking at dairy. Dairy's been a great source for protein. We've seen cottage cheese just explode in popularity, a lot of the yogurts. So that's an area in addition to a lot of the protein shakes that we see. And, with fiber, it's getting those fruits and vegetables in there, getting some of the whole grains in there, and then certainly adding to it all with supplements.
Are you seeing at all shoppers maybe going toward canned goods as opposed to maybe fresh produce or fruits when we think about the produce section? Are you seeing people maybe trading down from a brand name to Walmart's Great Value?
People are prioritizing, making their budget stretch, and that is certainly a way to do it. So working with private label, working with more of the dry goods, the canned goods, there's value there. And certainly a lot of the retailers are incentivizing people to shop in that area as well with some of the specials. So it is a constructive way to make your budget stretch further.
Robin Wenzel, head of Wells Fargo's Agri-Food Institute, joining us from Minneapolis. Happy 4th of July, Robin. Thanks for joining us on Bloomberg Businessweek Daily today. Just some headlines crossing the Bloomberg terminal. If you are in the eastern part of the United States, you are familiar now with the warm weather that we are having. Well, Con Edison has cut power here in New York to the Bronx due to an electrical issue in Riverdale. It's asking customers too in certain areas of Yonkers, Pelham, Mount Vernon, Bronxville, Eastchester, New Rochelle, and Mamaroneck in Westchester to conserve energy while crews repair equipment. Some customers have lost power temporarily due to an electric problem in Riverdale. The total customer count is around 89,000. We're going to keep an eye on this and bring you any updates as we do get them. Coming up next, we're talking soccer.
It's 2:40 on Wall Street. We do check markets all day long here at Bloomberg. Stocks are off session lows, still a decline for the S&P 500 index, but important to point out that most stocks in that index are advancing. Yes, the S&P is down 24 now, down 0.3%, but of the roughly 500 stocks that make up the index, 332 are higher, 170 are lower. The S&P now at 7458, a drop there of 24 points, down 0.3%. Again, off-session lows. Dow at a record up 374, up 0.7%. The NASDAQ Composite Index down 1.1%. The NASDAQ 100 Index down 1.9%. All of this with the SOX, the Philadelphia Stock Exchange Semiconductor Index, now lower by 6.2%. The VIX below 17, a 10-year on this Jobs Thursday, 4.48%. We do have the 2-year, 4.13%. The 30-year, 4.98%. Short-dated bonds rising as a slower than anticipated increase in jobs is lifting bets that the Fed won't be raising rates anytime soon. Again, the 2-year, 4.13%. Gold up $93 the ounce to $41.23 for spot gold. That is a gain of 2.3%. West Texas Intermediate crude up 0.1%. Barrel of Brent, $71.73. Brent crude up by 0.2%. Blackstone's QTS is walking away from plans to build its portion of a 2,100-acre data center campus in Virginia. handing a win to residents who fought for years to topple the project. Blackstone shares, they are gaining. Right now, we do have Blackstone up by just about 2.3%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. I'm Charlie Pellet. Nora and Tim, that is a Bloomberg Business Flash.
Thanks, Charlie. I don't know if Charlie stayed up late. Well, it wasn't too late, actually, which was great.
It wasn't too bad.
Watching the game last night. The U.S. was victorious against Bosnia-Herzegovina last night. 2-0. I, a person who knows nothing about sports and nothing about soccer, thought that was an incredible game.
It was loud. I mean, at the restaurant that I was at, it was loud.
Watching.
Everyone was cheering.
All right, next up, the U.S. versus Belgium, round of 16 Monday, 8 p.m. Eastern. Set your timers now. That game happening in Seattle. Nobody better to talk soccer with than the co-host of the Business of Sports podcast. We got Randall Williams with us, Bloomberg News senior reporter, Vanessa Perdomo-Maglione, Bloomberg News sports business reporter. They both join us here in the studio. Is the world taking the U.S. seriously finally this year when it comes to soccer?
It's interesting because I do think we're turning that page. We're starting to turn the page where people are tuning into the U.S. games and they're saying, wow, they're actually playing some real soccer, some real football that we're seeing from the U.S. for the first time. I think people think that we're going to go further than we ever have before.
I mean, it would be pretty cool. 250th anniversary of the founding of this country over 4th of July weekend, Monday in Seattle against Belgium, if the U.S. were to, get to pass the round of 16. Randall, I heard you on Bloomberg Surveillance this morning with Paul and Scarlett. And Paul, let's talk about this red card situation. Yeah. Paul said this is why the U.S. is not taking, as a country, we will never be a powerhouse in soccer because these rules are just driving us crazy. And we're refusing to actually abide by these FIFA rules.
Yeah.
Can you explain what's going on with
Sure. So Flo Balogun, I believe he scored 3 or 4 goals. He's been a top man for our squad. He incidentally, it was an accidental contact to the ankle of another player. And so that gave him a red card. A red card means you are immediately kicked out of the game you're playing in and then the next one. So immediately one of the best players is automatically eliminated from the most important game, you could argue, of the last 100 years for America. And so with that in mind, the rule is just very, very strong. It was an accident. There have been much more egregious red cards in previous World Cups. There's been a World Cup where someone headbutted another player. Mm-hmm. That is worthy of someone being suspended, not someone tapping your ankle. And I understand this contact might hurt, but the player continued to play for the rest of the match.
He was part of the game. He was fine.
Well, then what's the deal with that? Why? What is the determination that somebody gets a red card for something that seems accidental or it's incidental as part of the game and not malicious?
So the red card was given because they didn't deem it accidental. At the time, they gave the red card.
But they're going back and checking the video for offsides every time somebody scores a goal. Go back and check the video for this.
Right. Slow motion should be used for offsides. Yeah. Very particularly, it should be used for offsides. It shouldn't be used in an instance like this, which is a soccer play, which you should watch at game pace. They slowed it down to frame by frame, and then frame by frame you see him step on his ankle, so it looks pretty bad.
Right.
But if you just watched it, he was just tackling, he was just going for the ball. It was not malicious, but they deemed it malicious because when you watch it in slow motion, it looks that way.
So now, go ahead, Nora.
No, continue.
I was going to say, so now let's address the elephant in the room. Lionel Messi, the GOAT, my GOAT,
okay,
had a very, very
my
similar...
My son's GOAT, too.
Exactly.
Yeah, he's the GOAT. It's undisputed.
He had a very similar play earlier in the tournament where almost the exact same thing happened, and he was not called for a red card. You could argue that he had GOAT privilege. Mm-hmm. But what is going to be the effect of this sort of thing? I was talking to Vanessa earlier, Mexico, Canada, and the U.S. are performing phenomenally well for this tournament, and they're the host. That's great for FIFA. It's great for all 3 countries. Now you take a player who's turning into a star and you pull him off the field. It's not a good thing, and I think that what does FIFA do now? They're not going to allow him to play, but is there going to be a review process in years to come? I think there should be.
In sticking with that performance, Vanessa, just during the break, you were talking to us a little bit about how the U.S. has been performing and how this could potentially be a historic moment depending on where we land.
I have been saying this from the start. I do think that if the U.S. was able to capture the audience, capture the moment of a home World Cup, that they'd be able to do something that we haven't seen in a very long time, since 1930 in this country, to win a group. We've only ever won one knockout game, right? So now we've won two. So will we win two in a World Cup? I think it's very possible, but Flo being out, it really hurts our chances, but we are performing better than anyone expected.
And I think the thing is like Belgium's a beatable team. This is not Belgium from 2018 and 2014 when they have essentially, and don't mind you, they beat us earlier this season as well, but the form that the U.S. is playing with right now, it makes you think and makes you believe, which is what audiences want. At the same time, if they were to beat Belgium, they would eventually have to play France or Spain or Portugal, and those are world powers. But America loves an underdog, and that's what we all want to watch.
And you guys have actually been going in person to some of these games. What's it been like on the ground? I feel like just in the New York City area between the Knicks winning and now we got the World Cup just in the area in Jersey, I can only imagine how crazy it is in person.
The energy has been electric. It feels like the sports wave has not reached the shore in over a month, which normally this is the break period in sports right after the NBA Finals. But MetLife has been rocking for every single one of the games that I've been going to. The New Jersey Transit has held up just fine, even though I've easily expensed $98 a ticket to each one of these games, but that's what they're charging. And quite frankly, I think the tournament is going well. There were a lot of concerns coming into this about, if ICE would be at these tournaments, if people would be getting kicked out, all of those things. And the tournament thus far, the biggest controversy has been this red card. That is a win for FIFA, and unfortunately it's a loss for the U.S.
Vanessa, is it a win for Adidas? Is it a win for Nike?
I think it's definitely a win for the jersey
Randall's
sales as
holding
well.
an Adidas ball right
He's
now.
holding the ball. This is Randall's stress ball. He carries it with him everywhere. It's definitely a win for these companies, and what we're going to see is it a win for smaller companies? Cape Verde going through and what they were able to do, and the goalkeeper going, crazy the way he did. Capelli is a small, company. This is their first time ever at a World Cup, and now they have this insane Cinderella story that they've been able to follow. So their stock is something that's going to be really interesting to watch.
If I can just add on to that, I think Adidas, if you had to pick a winner right now, I would say Adidas is the big winner. Why? Because they have Lionel Messi. There is an unlimited supply of Lionel Messi jerseys, whether it is for Inter Miami, if it's for Argentina, you can go and get one. If you are searching for a U.S. jersey right now, Nike is a supplier, and you can't find them. There are multiple stories out about it right now, whether it be The Athletic, whether it be the international papers, and that's a problem. You should always expect, whether it's the Super Bowl, the NBA Finals, that fans are going to want these jerseys by the dozen, and they can't get their hands on them right now.
I shared this last week during our interview, but you can't even get your hands on a knockoff Nike jersey.
Yeah,
exactly.
Yeah, it's a real problem.
It's insane.
And I'd say the problem is that these moments don't come a lot. Like the next time that we'll be watching this will be in Spain and Portugal, and the team could look very different. So when someone wants to buy a Christian Pulisic jersey, they should be able to go into a Dick's Sporting Goods or a Nike or elsewhere to go and grab one.
All right, we have 10 seconds left. You're looking good for Monday night, U.S.?
I feel good about Monday night. I actually think the odds are pretty even right now, so I think we're going to be good.
2-1 U.S.
All right.
Okay.
You heard it there. Randall Williams, Bloomberg News senior reporter. Vanessa Perdomo-Maglione, Bloomberg News Sports business reporter. They are the co-hosts of the Business of Sports podcast. You've got to check it out at Bloomberg.com, on the terminal, and wherever you get your podcasts. Coming up next on Bloomberg Businessweek Daily, we got stocks on the move. This is Bloomberg.
This is Bloomberg Businessweek Daily with Carol Masser and Tim Stenovec on Bloomberg Radio and Television.
It is Bloomberg Businessweek Daily. That's Nora Melinda. She's in for Carol Masser on this Thursday, the 2nd of July, 2026. It's a day that I mentioned really feels like a Friday.
It feels
Although
like a Friday.
no ice cream at the Bloomberg office.
I know, they cheated
we get
us
Fridays.
today.
We get Fridays. We get ice
This is
cream.
what we look forward to. But
Yeah,
I think
it's
that
okay.
we're kind of sporting the red, white, and blue.
I
if
did
I
not
do
do
say
that
so.
on purpose, but we are.
Myself.
Jess Menton is doing it too. which is
Yes,
great.
all around the table here.
We are just a little over an hour from the close of equity trading here. The S&P 500 down 0.3%. The NASDAQ Composite down more than 1%. In the S&P 500, given that 171 stocks are actually declining and more than 300 are higher, it comes as no surprise that some of the mega cap names are dragging the index lower. Information technology down 1.7%. Communication services down 1.2%. Consumer discretionary down as well. Taking a look at the NASDAQ 100, the tech-heavy index, it's down more than 1.8%. We can go ahead and round that to 1.9%. In the NASDAQ 100, though, you still have 55 stocks higher, 47 are lower. There are some big names, though, that are dragging the index lower.
And as we were talking about earlier, we're just clearly seeing this rotation, a lot of investors ditching the tech space, but we do still see healthcare, consumer staples, both of those holding up. And we did get this mixed jobs report, so there's a lot to consider right now as we head, or end, I should say, this holiday shortened week shortly.
Well, let's take a look at some stocks on the move today. I'm Tim Stanovic along with Nora Melinda. We're joined by Bloomberg News Deputy Team Leader and Senior Reporter Jess Menton. Hey, Jess.
Hey, so it's been fun. I'm glad y'all laid that out because it's an interesting dynamic within the markets because like y'all said, you have the NASDAQ 100 down more than 2%. If you look at the VIX, though, below 17, and then the equal weight index, the SPW, marginally higher. So to Nora's point, when you're seeing healthcare outperforming some of those dividend payers, on the opposite side of that is, of course, technology. So I wanted to start off with SanDisk as some of the top stocks that I'm watching. SNDK is the ticker symbol on this, down about 14%. So this would be its worst day since February 4th. But this comes on the back of the information was actually reporting about Anthropic and how they're starting early stage work on its own AI chip, potentially holding stocks with Samsung Electronics, about a potential manufacturing partner there. But of course, if you pull it back and just look at the stocks in general over the last 2 days, down about 12%. I can't fail to mention, though, the second quarter was its best quarter on record. And then even the first half for chip stocks was the best first half relative to the S&P 500 in history. So you're starting to see some of those chip stocks give back those gains, and specifically more of those production makers today. And then if you're looking at that, NVIDIA is still down about 2%, but much more pain, though, for those production type chip makers in the double digits today.
Yeah, Tom Thornton over at Hedge Fund Telemetry sending me some IBs on the Bloomberg terminal. Tom, thanks for always getting in touch.
I know Tom as well.
Hey, he's a
known
big
him a long time.
And he watches the semiconductors closely.
He does.
And he's reminding me that Micron is at its lowest. He said it could be making a 1 month closing low today. It's not there yet. It's at its lowest going back to June 10th. So not quite a 1 month low. But he and many others are watching these stocks closely, especially after what happened in Korea overnight.
Of course. And then SanDisk, even if you look before today and yesterday for the first half, the 12 over a 12-month period, I mean, that stock was up over 4,000% and up over 800% in the first half of this year, the best performer in the NASDAQ. Obviously, if you're looking at the S&P 500, so giving back some of those gains, but still a huge run here for SanDisk as well as Micron.
So from semiconductors, let's stay a little bit in the tech space, but we'll call it autos. Tesla.
So if you're
what's going on?
Yes. So Mag 7 specifically, if you're looking at that basket that we have in the terminal, BM7T is the ticker on that. Tesla is the biggest decliner in the Mag 7 today, down about 8%. TSLA is the ticker symbol for Tesla. So worst day since July 24th of last year. Unfortunately, even though it actually beat on a number of metrics for when you're looking at those deliveries, up about 25% year over year for the second quarter. That stock was up for 4 consecutive straight sessions leading into this, so potentially being kind of buy the rumor, sell the news event. But on the flip side of that, Rivian, RIVN is the ticker, up 8%, so on pace for its best day since February 13th. But you're seeing a little bit of a different story there. It also raised its full year guidance in sales outlook, so you're seeing a bit of a brighter spot for Rivian, even though you saw Tesla still beat on a number of metrics.
Okay, we talked Tesla and Rivian. Let's go to some pharmaceutical names. mRNA, Moderna.
So this has to do with some of the equal weight, and while we're seeing that outperform with Dora was talking about earlier. Yeah. So you're seeing those dividend payers. So mRNA is the ticker symbol for Moderna, up 9% on pace for its best day since June 26. But if you look year to date, though, it's been quite on a tear, up 168%. Wow. Of course, I have to point out, been down for 4 straight years in a row, was one of those COVID darlings. But since its Science Day was actually a week ago on June 25th, it announced some positive developments when it comes to vaccines and mRNA, but that stock's actually up 30% over the last week since that Science Day. So you're seeing that, as well as Boston Scientific, other dividend payers in the healthcare space.
It's still, even with today's increase in what we've seen this year from Moderna, it's still a far cry from what it was in those COVID vaccine days. I think also investors are struggling with what do regulators in this White House?
Very different than what was like that 5-6 years ago.
Exactly. Jess Menton, Bloomberg News Deputy Team Leader and Senior Reporter here in our Bloomberg studio. For more conversations like this, check out our new Stock Movers podcast. Subscribe for 5-minute episodes on the biggest winners and losers in the stock market. You can check out Stock Movers on Apple, Spotify, or anywhere you get your podcast. Coming up next on Bloomberg Businessweek Daily, it is a hot one. We're talking the heat wave next.